morning, good afternoon, good evening, Y Whales, wherever in the world you are today. Welcome to episode 17 of yWeb3, Navigating Frontier Technologies. A seismic shift has happened yesterday. We were given the approval of the very first SEC Bitcoin ETFs. This approval marked a historic moment, opening the floodgates for mainstream adoption, financial institutions, reshaping really what we could see being the future of the cryptocurrency market. There's a lot of conversations, good and bad, around this. Right before that even happened, a day before, there was already a fake tweet that caused a 90 million market shakeup. Well, Bitcoin rocketed past 47,000 in anticipation of this game-changing IPO. A major stablecoin player is also stepping up into the public spotlight today with their own ICO announcements. From Nebraska's crypto fairness bills to South Korea's proposed payments ban, we're going to really go through a lot of regulation and technology news today. We've got a great panel of guests. Today is January 11th, 2024. Bitcoin is bouncing back and forth between 47 and almost 49,000 this morning, and the NASDAQ is at 14,900. Let's go around the panel real quick. I want to make sure everyone knows who our guests are. It's a new year and a lot of new faces here. Conor, where are you, and how'd you make your way over here today?
Yeah, thanks for having me, Jay. I live in Miami. Quick background on myself. Started my career in traditional finance, so worked in investment banking and private equity. Spent a lot of time around structured credit products. In my time in private equity, ran a big strategy rolling up single family homes and then taking them into the ABS market, which was a really popular trade in kind of like late 2020, early 2021. And then in 2021, left that fund and started MetaStreet, which is what I'm working on now, which is a completely on-chain structured credit market. So pair illiquid assets as collateral with liquid pools of capital, and the capital is split into tranches. So you can have high-risk participants, low-risk participants, all kind of getting kind of their risk return profile with what they want against the same collateral base. So we launched the protocol in kind of early 2022 and have gone through a few iterations of design. But at its core, it's a permissionless borrowing and lending market that supports all types of collateral, anything that is represented by an ERC 721 contract address. So you can think of it as the infrastructure that could support the same borrowing and lending markets for NFTs that are artworks and collectibles and in the same breath representing real world physical assets, collectibles that are off chain, carbon credits. So a wide variety of kind of like credit market support there.
It's a very cool. It's a very cool platform. I spent some time playing with it and met a number of your team members at some events. And so for anyone who hasn't played with it, it's like, holy cow, it works and it's here. And now it's a matter of real world assets hitting and getting some major liquidity. But it's cool to see true understanding of capital market infrastructure and then bringing that over into the blockchain space. So glad to have you today.
Thanks.
Raoul, let's bounce over to you, sir.
Sure. So I've been in financial markets for about 34 years now. I was at Goldman, then running global macro hedge funds. I'm a global macro guy by trade. Started a business called Real Vision, which is kind of a financial knowledge platform and media platform back in 2014. It's pretty well known by now. Also have an asset management firm called Exponential Age Asset Management, which is a fund of hedge funds that invests in digital asset or crypto hedge funds. And I still write macroeconomic research and investment strategy for the world's biggest hedge funds, family offices, high net worth, sovereign wealth funds, that kind of stuff, called Global Macro Investor. And I've been in this whole crypto space since 2012.
Yeah, and I think one of the things you and I got to chat yesterday, I mean, you were doing some of the first, theses on why people should be looking from the financial sector at Bitcoin. So this is today is a big day for you.
Yeah, I mean, my thesis originally, I wrote the first ever strategy piece on Bitcoin and how to value it back in 2013. And, I could see the kind of stock to flow idea for Bitcoin versus gold. But my thesis was, well, the entire financial markets are going to use this for its infrastructure. Here we are 12 years later, still not got there. everything else happened, NFTs and DeFi and all of this stuff. But, the equity markets and the collateral markets not being tokenized, it's coming, but it's taking a long time.
Yeah, absolutely. And Jannah, my travel buddy from last year, we got to hang out at a few conferences. So happy to finally get you on the show.
Thanks for having me, Jay. I'm really interested in what you just said there, Raoul. Actually, the potential for DLT to transform and to take into its next digital phase of its life. Traditional financial markets was what first attracted me to this space. So that's very close to my heart. I've spent nearly 25 years, which is slightly scary, in financial services, mainly consulting. So I'm the founder and director of a consultancy called Markets Evolution, which specializes in financial innovation and regulatory strategy. I've been kind of looking at financial innovation for years, sort of crowdfunding, peer-to-peer lending, and things like that prior to getting an interest in DLT and its applications in the financial sector. I'm also one of the founding members and now a director and policy lead for the Digital Pound Foundation. So we're a not-for-profit trade association and think tank in the UK. That advocates for the implementation of a digital pound in both publicly and privately issued forms. So that's spanning the whole range of central bank digital currency, tokenized deposits, tokenized e-money, stablecoins and their variants and things like that, as long as they're fiat referenced. We also advocate for a diverse, effective and competitive ecosystem for these new forms of digital money and what that might look like and how they can enable and be kind of an underpinning infrastructure in the transition to a digital economy and digital financial system.
Fabulous. No, and if you can see, and thank you always to Andrea as she puts these panels together. I am the least educated in this on this panel, and so I'm really excited to kind of ask the questions because you can hear you got three experts in TradFi. That have all converted over into this blockchain-based ecosystem. And, we really all kind of have to understand that there's this balance of power of, the technology and this innovation around, regulation is bad versus what we're seeing today, which is like, hey, if you want institutions, if we want the largest liquidity providers on the planet involved in just Bitcoin, the OG, it's got to be wrapped, in regulation, and it has to have rules and compliance around it. And so, Conor, you've kind of worked on, how do you transition, into this? And I think a lot of us are kind of waiting for what is the game book? What does the game book and a playbook look like this? And so let's just go ahead and start off with, Bitcoin was designed around, shunning these financial institutions, shunning of Wall Street. And it went from, F you BlackRock to BlackRock, please buy Bitcoin. And so I think it's going to be really interesting. I'd love to hear just the theses around the horn. Right now we've already got, Kathy Woods is from ARK. She's out there saying $600,000 Bitcoin is her target by 2030. And so, there's a lot of FOMO that's going to be happening over the next few days and weeks and months around this. But I'd love to hear kind of the thoughts about this culmination now of spots, Bitcoin ETF, which is very different than a futures ETF. And so, Conor, do you want to take a stab at, what you're kind of seeing in the market today and your thoughts around this?
Yeah. So just from my perspective, the way I think about it is like price drives narrative. I came into the space in 2021. So after both Raoul and Jannah. And a large part of that was because of price driving excitement. And then you start to see all of these corporate folks talking about, launching their metaverse plays and all of this different stuff. And I think that's always been the case. And I think the price driving narrative will continue to be the case going forward over the next kind of like 12 to 18 months, with a huge added benefit of what I'd call like an Overton window shift around just like broad adoption of recognizing that Bitcoin is not, used for criminal activities or so on, regardless of what, maybe the narrative from like Gary Gensler, or Elizabeth Warren being, staunchly anti-crypto, having big, large, well-connected, well-funded institutions now running a product that relies on people buying Bitcoin for them to make money, I really think you'll start to see an Overton window shift within corporate, U.S. Businesses. And the outcome of that will be really positive for people who are building products that rely on crypto infrastructure, because there's always been a huge gap between what can I build that I can use this permissionless, virtual machine, and what can I then connect into the real world. And so far, you can build crazy, complicated, fascinating projects that rely 100% on blockchain. And as soon as you go step one toe out of blockchain-based activities, it gets infinitely harder. And so one example is one product that we've been working on is unsecured credit. So users that are using their credit score to then borrow money on chain. And this is something that makes a lot of sense, and you can totally build that business sustainably. But the credit bureaus don't want to interact with blockchain, at least not right now. And so when that shifts, and when all of a sudden the credit bureaus are saying, well, hold on, Franklin Templeton and Fidelity and PayPal are all pushing this technology, maybe we should actually be looking at this. Maybe we can get an edge. Maybe Equifax can get an edge over TransUnion because they're actually ingesting more on-chain data. That will be really beneficial for the industry as a whole. So I have less of a view on price movement for Bitcoin, but more about how this has really big ripple effects of all of these startups that are trying to build products that use this technology.
Agreed. As someone who has a startup that uses this technology, this is good. Raoul, coming back to you, and again, we talked about it earlier, you've been in the space for a long time. You probably stood on a lot of stages back in, 2012, 2013, early in the days and said, hey guys, there's something coming. Here's what it is. Look at what it's already done. And, we've seen the pictures of the crowds back then, and we've even seen pictures last year. I was at Bitcoin Miami. It was a ghost town. Are you feeling a little bit of good validation that out of all the different assets there's chose from, Bitcoin is the OG. There's been thousands, tens of thousands of alternatives, Bitcoin Gold, Bitcoin this, Paxos has made a whole bunch of things. But at the end of the day, the market is still choosing Bitcoin for the solid theses of which they started.
Well, Bitcoin is actually not the blockchain that's going to be used for a lot of this. So Bitcoin has a different purpose in this space. And it's an easier thing to understand. If narrative is important, memetics are probably the most important thing in this space, then, Bitcoin is the easiest one for people to understand, as opposed to a virtual computer that is distributed. It's just the complexity behind that. People will start getting things like the ETH narrative soon enough, because they'll just go, oh, it's Bitcoin with a yield, and they'll love it, right?
Yeah.
And yield allows you to do a lot more things than you can do with Bitcoin. The whole financial market, the entire infrastructure of the financial markets, everything that Conor's talking about is based on one single thing, yield. So that becomes, a very fascinating perspective. But why the ETF was so important, it wasn't from the validation of Wall Street and others, because, we don't really care. We've been in this space long enough, and we actually cared about disrupting the space. It's the fact that they came across to our side. And stuff that Conor's working on and Jannah's working on, that is the financial markets moving across into this new world. That's a big deal. So, if you're bringing the ETF, the capital from behind the ETF, that's just like a trade deal between TradFi world, let's call it fiat world, and crypto land. That trade deal allows the flow of capital. Now, the flow of capital means that you guys who've built startups will see more let's say the crypto economy growing, creating more revenues, more investment opportunities, and it drives the flywheel, because it really is an incentive-based system, which is so clever how cryptocurrencies themselves work. It's a incentive-based system to bootstrap and grow a network, because it creates Metcalfe's law effects. So it's a very big deal, not because Fidelity is actually a bad example, not because BlackRock, because Fidelity have been in the space for a long time.
Yeah.
It's not because BlackRock now given it a stamp of approval. It's because we've just done the WTO trade deal of getting China into the WTO. We've got crypto land.
Yeah.
to do a very big trade deal with Fiat World.
Today's episode is proudly sponsored by Beyond Enterprises, the ultimate 360-degree partner for companies ready to embrace the power of blockchain in their business strategies. Beyond Enterprises stands out as a beacon of expertise with a blockchain-agnostic approach that has seen successful projects on Ethereum, EOS, and Arc. Guided by blockchain thought leaders and fueled by inspired advisors, the team has played a pivotal role in over 40 successful ventures spanning token generation events, security token offerings, exchanges, and more. From healthcare to travel, finance, and beyond, Beyond Enterprises has left a massive mark on diverse industries. Elevate your business strategy today with pioneers of blockchain integrations, Beyond Enterprises, trusted 360 partner. I think it's huge. And really right back to, though, I think you brought up a good point. Bitcoin is Bitcoin. It's digital scarcity, digital gold. It's its thing. It's not a great network for doing things. We've seen ordinals and people try to use it as an L1. ETH is an L1. It's a very, very different use case. It's a very different thing. And I hate that the word cryptocurrencies, cryptography, tokens, all that other stuff makes sense. Do you feel like, the fact that we got Bitcoin in, and Bitcoin is, I'm not a Bitcoin maximalist. I can bring 20 of them on the show, and they'll tell you all the 3,000 reasons why Bitcoin is different, and Saylor can do it all for days. Do we feel like the fact that we got Bitcoin, kind of like as a household name and brand, it's now something that everyone can own on their 401k. They can have it in their IRAs. You can buy it through traditional means. Do we feel like we've now kind of opened the door that people are going, hey, there's value in the blockchain?
What we've done is we've all been seed investors and Series A, Series B, Series C, Series D investors in this asset. We've just IPO'd it. It's the first $1 trillion IPO in history. And you've got to think, it's mind blowing what we've memed a $1 trillion asset into existence by sheer force of community and passion behind it. And it now IPOs as essentially the largest IPO in history. I know it's not an IPO, but just as a mental model of understanding this, it is such a big deal from that perspective, and the validation that has come from that. And it will ripple through the whole space, because the next thing, it's BlackRock have applied for the ETH ETF. That will come. And there'll be more to come as well. So what we're doing is just creating all these linkages, all of the ability for people to migrate out of an old broken system into a new, efficient, effective system. It's not free of flaws, for sure. We know that, but the technology stack and how things work are much better. We talked a little bit about stuff like tokenizing of equities or stuff like that. The breakthroughs in stuff like the Solana Fire Dancer that's come out of jump trading basically changes the entire game for what we can do. So now we don't have to look for big lumpy assets that can go on chain. We can now put anything on because it's basically ridiculously fast and cheap. So lots to come out of all of this. This is just the start.
I love that. So Jannah, from a reg tech side, and what you do focus on is currencies, is things that can be used to purchase daily goods. I think that Bitcoin is a terrible currency. I think it's, when people talk about, here, use the Lightning Network and you can buy things and sell things, like no. Like, this is, using ETH as a currency, using Bitcoin as a currency, I think is horrible ideas, because they're just too volatile, and it's not designed what it is. I mean, it's now, it was useful for a minute to kind of gain adoption. But I can tell you, the guy that's still, that's spent 100 or 10,000 Bitcoin on a pizza, like, he's proof that these are not currencies because they're not linked to any stable asset. How do you feel today, now that we're kind of seeing an early kind of iteration of regulation around a blockchain technology? Do we feel like this is going to open the road towards CBDCs being globally accepted, or just institutions kind of saying, okay, there's technology behind the blockchain that's worth looking at?
I mean, I think that, well, first of all, the SEC approving a Bitcoin ETF is a jurisdictional specific event, which doesn't really impact anyone in the rest of the world who can't access that anyway. I think that it has significance, though, on a wider scale, because if it paves the way to the introduction of ETH ETFs, for example, and things like that, then it ultimately leads investors to question why they want exposure to the underlying asset. And that's going to be for different reasons. So for Bitcoin, for example, although it is a terrible means of payment due to its volatility, I think it's going to cast the spotlight on more on the question of why is Bitcoin deemed to be a valuable asset? What purpose does it actually serve, and what purpose will it serve on an ongoing basis? I think the case is like more evident for those of us who understand how DLT and blockchain works and what it can be used for something like ETH, because it's clear there that like if you're exposing yourself to ETH, then you're basically taking a bet on the utility of the Ethereum blockchain. So I think there's going to be some interesting questions there. I mean, Bitcoin, despite the fact that most of us would say it's a terrible store of value and it's terrible as a means of payment, it is actually used for those purposes in some parts of the world where, you know, people's currencies are even worse. And so it does have utility in that respect. But I think as more ETFs are created on different underlying cryptocurrencies or baskets of cryptocurrencies, then there is going to be more analysis of what the value of those blockchains are, especially now that they're coming into the realm of, you know, the regulated investment world, who do have the analysts who are going to look at this in more depth and look at the inherent value and stuff like that. In terms of the impact on adoption of digital forms of fiat currency like CBDCs, stablecoins, and things like that, I think there's very little impact really. I think that the two are sufficiently divergent in terms of, you know, their form and function and stuff like that, that it's not going to really move the dial in that respect. I think, though, that again, it might help clarify in some minds more in the TradFi world as, you know, analysts start looking at, again, inherent value and use cases and things like that. I think this might force them to finally, you know, understand some of the differences between these different types of digital currency and what they can be used for and stuff like that.
Yeah, I mean, to me, I'm in what I am a maximalist in is that the SWIFT system and kind of the banking interchange systems are going away, and that the entire world will be on, you know, a blockchain interchange type system. I don't think there's going to be one chain that rules them all. I think, you know, I just watched a really interesting, you know, story about, you know, Netscape had 98% of the browser market, you know, in the early 90s, and they're non-existent today. So first mover advantage isn't always what's needed, even though right now Ethereum has been able to capture that. You know, we've seen a lack of innovation in reality kind of come out of that ecosystem. So my question to the panel, and feel free to chime in, is, you know, are we going to see kind of maybe a splintering of this ecosystem? You know, are we going to see kind of the dark web, and then kind of the regulated side of things happening, where there's the degens are going to do what they're going to do. They're going to play with the technology. They're going to be anonymous. And, you know, the financial institutions, you know, they do require regulation. They do require, you know, kind of those audits and the compliance around the world. And Jannah, that's whether that's in the UK, the US, LATAM, even other parts of emerging markets. I think there's going to be kind of my question is, do we see there's going to be kind of a good splintering between those that want to play by the rules using the technology, or those that just say, hey, the technology overrides the need for regulation?
Well, I think that already off the bat, most of crypto is a closed sandbox, just with the exchanges largely getting, you know, in line with the regulators, not 100% at this point, but a good portion of how you can on and off ramp into crypto. And then I think that just big picture, the opportunity set is so much larger if you can actually onboard, you know, real assets beyond just what's able to be like the degen gambling side of the house. And so I think that will inevitably just crush the smaller kind of like fully anonymous activities, because the opportunity will be so much greater that's where I think, money will flow to.
My view on this is, look, almost all technologies that we use are split between the regulated. If you look at email or messaging, if you work for a large company, they regulate what you can use, how it is, what's recorded, what's not recorded, but what you use for your personal life can be very different. And I don't think it's very different here. It's like, if you want to operate within the TradFi system or fiat world, you're going to have to abide by the regulations. If you want to store money yourself on your own ledger device outside of the system, you can do that too. Gold operates in the same way. No reason you can't have that duality of systems. So whilst most of the activity happens within the regulated space, I mean, the point of crypto is that you can operate outside it. It's the point of gold as well. While nothing else works that same way. I mean, equity markets don't. No other investment markets have bearer instruments. There are only two.
I like
art is other ones and stuff, but that's not liquid.
Yeah.
Yeah, I like your example of gold because it's gold is, as you say, if I want to trade it on a regulated market, if I want to trade it in a multilateral environment, it's going to end up ultimately being in a regulated market of some kind. Whereas I could sell you a bag of gold that I have stashed under my bed, if I had such a thing, bilaterally, and that would just be an arrangement amongst ourselves. I think, though, the key difference with the DeFi world is that question over whether anything is, truly DeFi, whether anything truly doesn't have an operator. There are obviously situations in which something will be genuinely bilateral, and I think that's the same as, the gold case and things like that, or two people exchanging, one paying another in cash or something like that. But DeFi introduces the new question of, can we have a multi-participant system that is truly decentralized? Which is a really interesting question, and I think where
we've had a few
regulators
we've had a few examples. I mean, the more successful protocols within DeFi space, Uniswap, for example, it's a great example. When things start early, obviously there's people involved, but over time it just becomes an ecosystem and a decentralized it's a decentralized exchange, and it works phenomenally well. That you don't need humans in the middle at all. There's no help desk. There's no numbers. There's nobody to call. There's nothing to set up. It just happens.
But that's exactly what regulators hate. They hate the fact that ultimately, if you let a bunch of retail consumers go wild at this, then somebody's granny is going to lose their life savings or kill themselves or something like that. And who has recourse to what if the system if the system is truly decentralized?
This is non-consistent. You are at 18 years old allowed to gamble anything in a casino. You are allowed to lend anybody you want any amount of money for any interest rate. You can do pretty much anything you want, and it's unregulated. So why is the system of borrowing and lending in financial markets necessarily a different thing that should be regulated? I can eat any food I want, whether it kills me or not. I can jump off mountains. I can do anything I want. Why should I not be allowed to exchange something that is deemed to be financial when I can gamble in a casino and nobody can stop? There's an inconsistency around it. That inconsistency is driven by the system itself protecting itself from third parties. It's like, it's very difficult to start a bank. I know, I've tried. And it's very difficult to do so. Why? Because they don't want it to happen, because it's a self-protective system. So I'd just be cautious on saying why DeFi shouldn't be. It's more a question why it should be. Why do they not want it? Well, because then they capture the profits. A profit system that distributes amongst token holders? That's a sacrilege. How does JP Morgan make money? They will go all day to the regulators, say, you've got to stop this. But really, what difference is it?
I think you just gave
I think there is a
material
difference between someone, between someone, me lending you some money and charging you whatever extortionate interest rate I want because you might be desperate for that money. Or, the gambling example is a bit trickier. Let's park that one. But, the engagement of two individuals in some sort of financial transaction is different from the engagement of multiple parties together in a multilateral system in which the rules for engagement and recourse and things like that might not anticipate, necessarily bad outcomes. And again, if something goes wrong, then what recourse is there for someone? And it's less about systemic risk and more about.
Let's bring in the one that actually does this every day. Conor, this is what you do.
Yeah. So what I was going to say is I think that there's an appropriate place to bear the onus of like responsible disclosures and so on. And in the example of Uniswap, that would be on the token issuer, right? So the token issuer that you're ultimately going to Uniswap to buy a token and swap it with some other token, right? So the responsibility on, the token, turns out to be a scam or something, that responsibility is on the creator and issuer of the token. But Uniswap itself is just a set of smart contracts. So there is no, call center or whatever, as Raoul said, because it's just executing a set of smart contracts. And that ecosystem, that like little economic design is really, really cool. It's really beautiful. Like these LPs are earning yield based on volumes that people are swapping back and forth. And it's like, it actually has balanced out and worked really well at large scale. Now, I think that there's a huge argument to be made that, yes, this is true of Uniswap. However, a large portion of air quotes DeFi does not fit into that category. And in reality, that group who's kind of riding the Uniswap coattails says we're also decentralized. But in reality, they're not. There's behind the scenes coordination to get certain tokens listed, certain things approved by a DAO versus not. And that kind of undoes a lot of the advancement that Uniswap has made. So even in lending markets, for example, the previous cycle of lending markets, you had Compound and Aave, both of whom are governed by DAO votes as to what tokens can be approved or not approved. And fundamentally, that means that you have some folks who have a large incentive to get their token, a token approved as a collateral type. And that results in probably nefarious actions. But from 2021 until now, we've seen an introduction of truly permissionless lending markets as well, multilateral lending markets, where you have lenders that are actually setting prices individually, all of whom are aggregated together and create a market. So Ajna, Morpho, these are two that do ERC20 lending. Obviously, what we're doing is NFT to ERC20 lending. That's also fully permissionless. And in an academic sense, it's like there's truly no centralized party in any facet of that decision making. So I think that there's like a really strong argument to be made that this stuff that's truly permissionless is a massive technological innovation. However, there's all of these like coat hangers that are riding alongside them and are kind of bringing a bad name to what the folks that are like doing true innovation can offer. So that's my perspective on it.
I think, and the reason I posed this question, and it was a good one, it spurred a good conversation amongst the panel, is I think we're going to see a splintering between retail, which is, consumers wanting to interact in peer-to-peer trading and they're going to choose the best protocols of which provide them safety. But then you have the institutions. There's very few institutions, no matter how big they were, BlackRock, any of these other guys, that were willing to touch it unless they had that regulatory clarity and they could meet their fiduciary responsibilities to their shareholders.
The only reason they did that is because they were forced to. I've spent a lot of time speaking to Apollo and a whole bunch of these people. They were desperate to get involved in the lending markets because they do that anyway in unregulated lending markets all the time, the private markets. But they were so scared because the regulators were bad. It wasn't that they wanted regulation because it's a cowboy marketplace. These guys know how to operate. They actually
very much so.
didn't want to get sued. Simple as that.
Yeah, I mean, Ripple. I mean, we talk with the Ripple team constantly. I mean, $200 million in legal fees that they've had to put out, and defensible across the board that they're correct. And if there's been an issue, they're happy to provide it. They've been operating as if they IPO'd years ago. I mean, all the audits, all the discrepancies, like they do the work. You know, even if it's not required, they basically operate as if they are a public company. And then you have Coinbase, who is a public company who the SEC did approve and is still being sued by the SEC. So I think my point being is that, institutions are going to have to, they will follow the rules. They're not going to get out of line. And eventually we'll see a culmination of this thing happen, because I think, and Jannah, this is where you can talk intelligently, is that I think my car is a really good, first step towards seeing what a digital and tokenized economy can look like with proper regulation. The U.S. is just so far behind right now that we're excited about, an ETF, when in reality it's taking multiple steps backwards from a technical standpoint.
Yeah, and I think it's a reflection of the US is at a bit of a disadvantage when it comes to this stuff from a regulatory perspective, because it's got so many different regulatory agencies involved, and a lot of stuff is, instead of being done at a primary legislative level, it's kind of been done through the courts, and it's test case after test case and things like that. And in the rest of the world, in the UK and the EU, for example, there was never a question of XRP being a security. It does not meet the definition for a financial instrument or transferable security or anything like that would fall under any existing financial regulation. It's only in the US with the Howey test that becomes a question. And so I think, in some cases, it's the rest of the world looking at what goes on in the US with a sort of sense of bemusement. Like, guys, how are you ever actually going to move towards mass adoption when you can't even figure out what's security and what's not? You don't have any, bright lines around that. I think Mika is a really good example. I mean, it's not perfect, but the EU did consult heavily with a lot of different sectors and different types of market participants and things like that in pulling it together. And it's a pretty good template for, as Conor said, regulating the issuer and the issuance and that kind of thing. And it has some definite limitations and some innovative ideas. I think Mika too is already in the works behind the scenes, but it's really good first step, and as a harmonized regulation across a number of member states as well, some of which had already come up with their own local regimes. It had the opportunity to look at what had been learned in those local regimes and things like that before it got started, and it covers a lot of activity, but not all of it.
Before we start on our next topic, here's something really exciting. Everyone struggles with these really highly complex, intricate Ethereum names. ENS has a solution that's really game-changing for you. Revolutionizing your digital identity with ENS. Transform long, complex Ethereum name addresses into easy-to-remember names, safely, securely, and uniquely yours. Visit ens.app to get started today, and ENS welcomes you to the new internet. So I want to kind of pivot this conversation a little bit and let's go forward, because everyone's an expert on this call. And I think that there's a couple core issues that can be addressed and called out from kind of an overall asset class that have not gotten there. And Jannah, you and I got to hang out at the Firebox conference this year and really see, what institutional custody looks like. And so I have been saying for the last few years, when people say, what's the biggest, how is crypto going to be adopted by mainstream? When is this going to be a thing? I think bridges and wallets are two of the just absolute, we are lagging behind so far, because the concept of self-custody, I say it's your right. It's just a really bad idea. I don't care how smart you are. I don't care what piece of ledger or plastic you have. We saw Fireblocks and the infrastructure these guys have built, which is institutional grade. but the starting price point is $70,000, plus a big technical lift to get there. So, this is like, hey, I want to drive a car, but the only thing available is an F1 race car. How does that comes down? But I'd love to hear the thoughts around the horn is what is the biggest barriers to entry? There's a lot of them, but I think bridges and wallets to me are really have to be resolved in a way that is, safe and secure because, a bank is a good custodian. We may not like our bank, but if they lose your money, you at least have some insurance levels and everything else. And let's not talk about Silicon Valley and some of these other things. But, I'd love to hear kind of what do we see that, now that crypto is back in the mainstream and we're going to see this bull run happen again, where responsibly should VCs and should all of us be focusing our attention to make sure we do this, when capital is flowing in easily, that we do it responsibly and not a bunch of, degen JPEGs again. Conor, I'll start with you because you're the degen JPEG expert anyway.
I feel really strongly on the wallet point myself. There's actually been a lot of advancement in wallet infrastructure over the last 2 years, particularly with account abstracted wallets. So there's now a bunch of different apps. Privy is the one that comes to mind, which if you guys followed the Friend Tech, explosion a few months ago, Privy was the account abstracted wallet that enabled that. So account abstracted wallet basically just means that the wallet is hosted only in that set of smart contracts, and I can use like a Gmail to log in. And with account abstracted wallets, you also can do what's called a paymaster, where basically the wallet provider is paying for that user's transaction fees. And so you could imagine, a company will create an app and they want to get new users onto that app. And so they'll just pay all your transaction fees, like no big deal, especially if it's on a layer 2 and it's not too expensive. And that starts to look a lot like what a Web2 experience is from a social app or anything like that. So that's an area that I think I'm really excited actually about the improvements in wallet infrastructure. And I think that will be a big boon for just like adoption and users. Candidly, like most people come to crypto to speculate, right? So that's just the industry as it is right now. And maybe as you kind of get more, like I said before, this Overton window shift of people just not thinking of this as this like back alley casino, then you'll start to have like new users come in who aren't just here to gamble, but actually want to enjoy like a user experience for a social app, which there are actually very many now. So the consumer facing infrastructure. And the other thing I'll say is 2021, you didn't even have L2s. No. So you didn't even have, like, we hadn't even solved the gas problem. I'm not sure that we've solved it yet either, but at least it's a lot better than it was. You're going to start to see like some pretty cool apps come out that are consumer facing because the dev tooling is now there that people can build this stuff. And, I can build an unsecured credit app using a Privy wallet, and it's mobile first, and that'll take me 2 months. And that's so that like is pretty cool. I think that will be like a huge boon for the industry.
Real quick on that same note, are you feeling very much multi-chain is our future, or do you feel like there's room for like a Solana to just say like, look, gas is irrelevant, it's just do it all on a single chain?
Yeah, I think I definitely I pay attention to Solana. I think it's relevant. I think there's a lot of value stuck on ETH and EVM, chains, and I think that's really, really attractive for new startups. So that's really Solana's problem they'll have to solve is attracting the dollars. Because from my perspective, when we decide, where we're going to build something, you're already taking on so much risk as a startup, and especially as a crypto startup. So the last thing you want to do is also pick the wrong chain and then fail because, you picked the wrong chain and now it turns out there's no users on there. So that's how you have, if you're trying to de-risk your decision-making, that's how we did it. And as long as there's that much capital on ETH and users and awareness and all that stuff, ETH ETF would be another big boon for that. It will be harder for other chains to compete. That being said, Solana offers something that ETH absolutely does not. So I totally could see the argument for Solana being, relevant going into the future.
So brings back to need really robust bridge structures that don't exist today. Raoul, you spend a lot of time talking about this and more. You see a lot of investment ideas and concepts. Where do you feel the most appropriate places for again highest ROI on adoption globally should be allocated?
Firstly, interoperability, as we're talking about. You just need to not care. I don't know what computers you guys are on, what routers, what Wi-Fi network. I don't care.
Yep.
Right. That's how technology works. When it becomes magic, is we don't even notice it. So I think that's a key thing. Wallets are part of it. How do wallets exist? I think the integration with the TradFi system will make it easy as well to link all these things together. I think that's all coming. As Conor says, everybody's building. Tons of money went into all of this. Mm-hmm. I think the other thing that's going to be incredibly important is digital identity. This whole world of AI, you're going to live it in the US over the election, and it is going to be horrific. Terrible. And there'll be forced regulation really fast on everybody over AI. Nobody's had again, like crypto, it's a distributed system of which you can't really touch it. So we're going to need digital identity really fast. And I think it's very useful. We've seen in India roll out really well. That wasn't on blockchain, but the Aadhaar system went out to 1.1 billion people. And then their payment system on top. And then that digital system allowed for KYC, AML, because you set it up in advance in a locker essentially, and then you can go with your fingerprint and KYC everything. Right now, I live in the Cayman Islands. It's a KYC nightmare. Everything you do, you try and buy a loaf of bread, you need to produce 17 documents. I mean, it's just awful. And if I could do that with my fingerprint, it would be great. And you can do that in India, of all bureaucratic countries in the world. So it's coming. So that's the other one, digital ID, and that digital and attached to your ID permissioned, that you permission uses.
Yeah. No, and I love that and agree with it, because as we build, we have our project FinRamp, and we deal with, digital IDs as well. And I was shocked when I really did a deep dive into digital identity. And Jen and I spent some time with the CTO of blockchain from Visa while we were in Mexico. And I was shocked to hear that the average person is being KYC'd, and not just multiple times, but being KYC'd by the same companies, over and over and over again, because they don't have a way to store these things. And so I think that you're right. There's going to be definitely this AI that we need to determine what's a human, what's not a human. And I believe that that's something that should be disclosed, because I don't, it's great that I can chat with ChatGPT and have these conversations with bots. I need a definitive, like this is a human and this is not. And so I think there's going to be this really big, kind of awakening moment that we're going to have maybe this year, maybe next year, about who am I speaking to? Who generated this data and who validated this data?
What information, what video you're watching is real.
Oh my God.
I'm training a bot right now that is a video version of myself that you have conversations with. It's mind-blowing. Yeah. And you can't really tell.
Yeah. And voice is already gone. Like my voice, I've recorded a couple hundred podcasts at this point. No one would ever be safe to have just a phone call with me. The best you could do is hope that Zoom is here. But in the same sense, you got hundreds of hours of me recorded on Zoom on YouTube. In this exact setting, I fully believe that I can have a better version of myself that's AI generated doing this in the next few years. But I think that, I'm going to pivot over to you, Jannah. We actually talked on stage at Transform Base that I said, I think one of blockchain's integrations with AI is it's the best protection for humans against AI. The concepts around token gating, the concepts around, ID invalidation and re-verification. But that being said, where do you see, because you're a little bit different on the things that you focus on, Jannah, where do you see the investment dollars should go into?
I think, and I agree with what everyone else has said around wallets, bridges, interoperability. I mean, I think a really interesting challenge is how fast the space is moving and what this means for adopters, basically, and what this means in terms of the solutions we need. And it's a bit difficult to explain, but basically, if we look at how data storage has changed over the years, we used to have, we all most of us probably remember floppy disks and hard disks before that, and we remember, we remember external hard drives. I have an external hard drive that is, full of stuff, and I can't even begin to think what I'd have to go through to try and get to access it. And that's just how data storage formats have changed over maybe like a 35-year period. If we look at what's happening in the blockchain space, and as you said, layer 2s didn't even exist, 3-4 years ago. What we're seeing now is actually not just stranded data, but stranded value and stranded applications. And I think that's a real risk. An early adopter gets in, they get involved in something, and then due to just the rate of innovation and change in this space, they find that not only do they have data stranded somewhere, but they have assets like, actual value stranded somewhere. And that's a hugely off-putting factor, I think. Somebody buys an NFT, or, an NFT of a cat they really like or something like that today. And in a year's time, they might not even be able to access it. And that's before you get onto actual value again. And so I think a key component of this move to interoperability and the kind of seamless user experience which wallet providers can provide is taking away that uncertainty behind the scenes, having some sort of, guarantee of backwards compatibility or the ability to port and migrate. And this ties into the bridging and interoperability side of things, because ultimately people want to take what they're doing and investing now and carry it along with them as the ecosystem evolves. And that's certainly on both the retail and institutional level as well. But they don't necessarily want to concern themselves with how exactly that's done behind the scenes, or even necessarily that it's happening. So I think that is going to become, quite a hot topic at some point. Not very exciting, but increasingly important.
Jannah, I feel personally attacked by your statement, because on today of all days, I have to remember that in 2010, I purchased 100 Bitcoin for $20. And because there was no intrinsic value and there was nothing I was interested in, when I threw away the computer, there wasn't even wallets back then. You had to log into a node. And it was just this incredibly complicated thing that never, there was never a way, and, but Mt. Gox people are theoretically getting some of their stuff back. So you're right. Being an early adopter in this, isn't always, a benefit. And so I think that, again, we've kind of hit the nail head. It's infrastructure. I mean, it's infrastructure and its base level. We've proven mathematically that these tokens are immutable. We've proven, that a blockchain can exist and be distributed. But the actual interactions that we have with them, and how we use them is really now that interoperability thing that I think every one of us hit on. So as we kind of, one more point, I just want to bring it, which is the actual usability. So now, we saw the rise, I think, a few years ago when stablecoins came on. And when we talk about real world assets on chain, 98% of what those are today is stablecoins. And so with Circle now, IPOing, and I think USDC is, to me, I feel safest with it. I don't really feel massively safe with most of these. But that being said, I'd love to kind of, in a reverse fashion, we'll start with Jannah. When we start getting into actual stable coins, CBDCs or whatever we're going to call them, do you feel that that's going to come from the private sectors, or do you think that's going to come from governments that are going to be the issuers and reliability, or will be a mix of both?
To be honest, I think that there are two sides of this, really. There's kind of retail usage of CBDCs in particular, and wholesale usage. I think a lot of focus at the moment is on the retail side by governments, and it's certainly the more easy side for the public to understand. I don't think necessarily that retail is where most focus should be, especially since there's more institutional, so bank interest in other, in their own tokenized deposits and things like that. And the case is stronger for kind of wholesale CBDC as a digital settlement infrastructure for private issuances that could include a mixture of tokenized deposits and other non-bank issued stable coins and things like that. I think on the retail side, it's really important that governments continue to explore those, but given that this is such a nascent form of money, you kind of, and it's an expensive undertaking, it's a massive piece of infrastructure investment. You kind of want to be certain about what you're building and why you're building it, and want to make sure that it's actually fit for purpose and that it can scale and evolve over time to meet the needs of your economy without having to throw it away and build something new in 5 years time, because again it's a massively transformational foundational piece of infrastructure. So I think from a CBDC's perspective we'll definitely see more on the wholesale side. I think from a retail perspective we're going to see that's where the private sector is really going to start doing a lot more over the next few years. So Circle's IPO, for example, they, while the main user for USDC and USDT is still crypto trading and, holding funds on exchange or holding fiat denominated value on exchange, you don't IPO because of that. You IPO because you see a future in which this is actually a systemically important stable coin that's in widespread usage for things like retail payments. And so I think that gives us a kind of insight into where the private sector is going and what it's doing. And I'm sure in some respect as well, Circle, the timing of Circle's IPO is potentially linked as well to the fact that stablecoin regulation has become much more clearly defined and evolved over the last year in many jurisdictions. If it's not in place already, like MiCA, they are in the proposal stage, and also looking at what the banking sector is doing and how they are accelerating their plans in the tokenized deposit side. So it's becoming a bit of a private sector race, and that is, as all private sector races do, I think, going to significantly spur innovation.
Interesting. So Raoul, a slightly different question for you. What do you think, you spend a lot of time with this, what do you think is going to be the highest, consumer or institutional adoption that they're going to have, kind of this year? So we're seeing, interest come back to blockchain. Obviously Jannah is bullish on stable coins, and I completely believe, they're working out the regulation and compatibility with this. What do you think is going to be kind of the next blockchain based technology that's going to, become a household name?
I think a lot of the building blocks are already there. I would add zero knowledge proofs as another thing that we haven't really experimented yet fully with this cycle. NFTs, we saw this first iteration, but again, referring back to Solana, 1 million NFTs for $100. That's cheaper than printing out tickets.
Yeah.
Right. So I think the whole ticketing industry, hotel rooms, air flight, all of this goes. It's just a matter of how fast and who adopts it first, because the ability to release trapped capital just in hotel rooms is gigantic. We all book hotel rooms of which we can't go at the last minute and we lose our deposits or whatever it is. The hotel is not happy for that either, because they don't have you eating a steak and drinking a glass of red wine in the bar, right? They lose the extra revenue. But if we can have a tradable market in stuff, contracts. So look, I think that's big. I think the adoption of brands in Web3 is huge. I think we'll see a lot more out of the music industry, the sports industry, the entertainment industry, the luxury goods industry. So I think that's all happening. I think what Conor's working on is a very big part of what's coming as well. I think it's huge. And what Jannah's working on and looking at in terms of stable coins, the way to think of CBDCs is most of them are domestic currencies. So it's a domestic payments rail. Now, stable coins are global in nature. So the Bank of England's CBDC for the pound will not be fungible outside of the UK. That's the issue, because if not, you need settlement rails and all of this stuff again. and they'll have to have these trans-border agreements, but we don't care in the private sector. We just solve it. And that's what, so if you think of stablecoins as the euro-dollar market, and you think of CBDCs as domestic currency markets, unless it's wholesale, in which case at wholesale, at BIS level, they're all talking to each other anyway about how they solve that. So I'm excited about lots of things. I'm thinking the next 2 years is the everything, everywhere, all at once cycle.
Wow, that's a big one to be part of. Conor, I think you're already working on it, but any thoughts around what we're going to kind of see as being that big. I know you're having lots of fun doing liquidity pools or around NFTs and JPEGs and everything else. Are we going to see kind of that real world assets start to roll in, and you get to kind of take over a lot of the liquidity of the planet?
I do think so. Yeah. I think RWAs are for sure a narrative in the next 18 months. The other areas that I just thought of while Raoul was talking on zero knowledge proof, something that I think is really cool, very unknown project, but it's called ZK P2P. And it's basically a permissionless on and off ramp using existing peer-to-peer settlement networks. So they basically allow you to use a Venmo, send a Venmo to someone else that you don't know, and then it releases that same person's money on chain. So I send $100 on Venmo to someone, and it releases $100 to me on my wallet on chain. And they're using existing email infrastructure to basically verify the identity. So that's crazy. And that's a zero knowledge proof thing that just came out. So stuff like that is going to be, to the point on tech feeling like magic. To me, that's tech feeling like magic. And the other one I'll call out is I think we've gotten to a point in the narrative cycle to sufficiently say that the metaverse is dead, which is also exactly when it starts to really make sense. So, 2021, the amount of money these projects raised for metaverse, world building is astronomical. And most of them have now been counted out. I think we'll see this resurgence in the next, again, 18 months or so, where projects launch. I know, teams personally that have been really building really dramatic, worlds. And you have also driven on by like the Apple VR headset and all of this. I think we'll see that narrative come back. GTA 6 comes out, and they're going to have some token or something in there. Like, I think that will come back and people start to talk about that and get excited about it again too.
We'll know the bull run is on fully when Decentraland becomes a point of conversation again.
I probably would stay away from Decentraland. Just not financial advice.
Such a nightmare. So it really, like I said, bringing around the horn, you brought up Apple, so I'm going to do it in the closing question. Before you say, where to find you if people want to know more, are you going to buy the Apple Vision Pro? $3,500 for a Gen 1 product. I'm going to begrudgingly do it just because I feel excited about it. I want to really see what this looks like. I've bought every other headset that there is, and I hate them all. So I'm going to go ahead and burn an ETH and a half on one of these. Conor, you going to buy the Vision Pro, and where can people find you?
I probably won't, but it's a hack. My co-founder is like the biggest VR nerd ever, so he's gonna probably own one, and I'll just use his and see if it's worth owning or not first.
Wait and see.
But you can find me on Twitter at _Conor Moore, but mainly just go to MetaStreet.xyz, check out the protocol, and we have all of our social links on there. Super responsive team, so people want to find out more, we're always a quick message away.
Awesome. Jannah, you're going to head into VR land, and where can people learn more about Digital Pound?
I am not. I'm probably going to wait for an iteration or two before I throw some money at it. But I will probably try to find a friend and try theirs out. And people can find me on LinkedIn. So Jannah Patchay, there's only one of me, and at the Digital Pound Foundation as well. So digitalpoundfoundation.com.
Fabulous. Raoul from Cayman Islands.
I'm kind of like you, Jay. I'm going to FOMO into this thing, knowing that I'll use it for an hour and a half and never use it again. But knowing I will also come back in 3 iterations time and be endless and be living on it. So yes, I'm definitely going to waste $3,500 just to appease the Apple god. People can find me on Twitter at Raoul GMI, or check out Real Vision. So that's realvision.com. See the platform we've built to help people, educate them on everything from crypto to macro to technology, with AI built in and all the other. It's an amazing platform.
Yeah, no, I got a demo of it yesterday, and for anyone who hasn't seen Real Vision, I was blown away. Truly, I think is the future of communities related to Web3. So yeah, love it. And Jannah, hope to see you on the conference tour again this year. Had a fabulous time with you, and I do need to get the Apple Vision Pro because I have to continue my collection of Gen 1 Apple products and that I've personally owned. But I think it's going to be one of those things that by the time you're right, you get to Gen 3, it's going to be light years ahead of where they're at. But I think it's immersion is coming. So thank you guys all for the time today. Y Whales, wherever in the world you are, appreciate the time. We'll see you guys later and talk soon.